If you are a W-2 professional earning $150,000 and $200,000, the last few weeks of the year are your chance to make every paycheck and deduction work in your favor. So your options are more limited than a business owner, but timing and planning can still save you thousands. In this video, we are going to break everything down into 8 clear parts so you can follow along step by step. Whether you are a tax professional, medical worker, or corporate employee, by the end of this video, you will know exactly what to do between now and December 31st to lower your 2025 tax bill, boost your saving, and set up 2026 for success. So let's start with a quick roadmap. So part 1, maximizing your workplace retirement plan. Part 2, optimizing your health account. Part 3, fixing withholding before year end. Part 4, charitable giving and donor advice fund. Part 5, education saving with 529 plan. Part 6, employer stock plan and year end equity moves. Part 7, your December action checklist. Part 8, bonus tips and deadline you can't miss. So I will walk through each part of the real life stories, example, and practical steps so you can implement them today. So let's start with the biggest impact that usually happens, which is your 401k, 403b, or TSP. So for 2025, you can defer up to $23,500 from your paycheck. If you are age 50 or older, you can add $7,500 more in catch-up contribution. Why does this matter? So every pre-tax dollar you can contribute before December 31st directly lower your taxable income. And if your employer match contribution, that's free money, so not hitting the max means leaving money on the table. Here's a quick story. Maya, a marketing manager in Seattle, was earning $180,000 this year. In October, she realized she had contributed only $15,000 so far. So together, we adjusted her payroll deferral to 30% for her remaining checks. So bringing her total to the full limit by year end. Her employer offered a true-up match. So even with the higher late year deferral, she still captured every matching dollars. So step by step, here's what to do. 1, pull your latest pay stub and note your year-to-date retirement contribution. 2, calculate how much room you have left to hit the $23,500. 3, divide that gap by number of paychecks remaining. 4, log into your payroll portal and adjust your federal percentage today. 5, email HR to confirm your employer offer a true-up so you don't lose out on matching funds. If you are deciding between pre-tax and Roth contribution, think strategically. If your 2025 tax-free is higher than what you expect in retirement, prioritize pre-tax. If you anticipate higher rates in 2026, when some tax cuts expire, start shifting to Roth now. And if you want to see how the math play out for your situation, check out the retirement split worksheet from Pro Deductions. It's model pre-tax versus Roth saving for you in minutes. Now that we have handled retirement, let's move to our second biggest deduction area, which is your health account. So you want to optimize your health account, HSA and FSA. So this is part 2. So this is where a lot of professionals leave money on the table. So if you have a health saving account, or short for HSA, you can contribute up to $4,300 if you are on sale only coverage, or $8,550 for family coverage. If you are age 55 or older, you can add $1,000 more. Now, what most people miss, HSA contribution can come from payroll or from your own pocket. So payroll contribution might happen by December 31st, but you can still make personal contribution for 2025 all the way up to the tax filing deadline in April 2026. So let's look at an example. So Jordan, an engineer in Denver, age 56 have only contributed $5,000 to his HSA by October. We increased his payroll contribution for the rest of the year and set a reminder for him to make a final personal top-up in February. He also had a few $1,000s left in his flexible spending account, so we created a quick spend list like prescription, renewal, glasses, and a dental guard before his plan and December grace period expire. So here how you can do the same. So 1, confirm your HSA eligible under a high deductible health plan. 2, pull your year-to-date HSA contribution and calculate what's left. 3, increase your payroll contribution immediately. 4, note how much you will need to contribute personally before tax filing. 5, if you have an FSA logged into your benefit portal, check whether your plan has a carryover or a grace period and use any remaining balance before you lose it. Bonus tip, save every HSA receipt. You can reimburse yourself tax-free in the future, even years later, as long as you have proof. If you need help organizing the receipt, we have an HSA receipt locker template at Pro Deduction and automate this process for you. Now let's shift gears to your paycheck withholding. So this next section could save you from penalty and unexpected tax bill in April. So part 3, fix withholding before year end. If you owe taxes last year, or if you are expecting a big year-end bonus, now the time to make adjustments. So wage withholding is treated by the IRS as if it was paid evenly throughout the year. That means if you increase your withholding in December, it still counts as you have paid those taxes all year long. Here's a story. A new software project manager in Austin has set to receive a $15,000 bonus in December. So last year he owed a couple $1,000s at filing. This year we filed a new W-4 with an additional $3,000 of extra withholding just on his bonus check. So that single move erases underpayment penalty and makes sure he wouldn't owe next April. Here's how to do it. So 1, review your most recent pay stub and last year return. 2, estimate your 2025 tax due using the IRS withholding calculator. 3, submit a new W-4 and add extra federal withholding for your final checks. 4, confirm the update before your payroll cut-off date. 5, if you are in a state with income tax, do the same for your state withholding. This is one of the most powerful last-minute strategies for W-2 earners. Now let's talk about something meaningful, charitable giving. So this is part 4, and this is where taxes meet generosity. So let's talk about charitable giving and donor advice fund. So if you plan carefully, you can support the causes you love and still get a solid tax deduction. But here's the catch. Charitable deduction only count if you itemize. So for your 2025, that means your total deduction must exceed 50,000 if you are single, or 30,000 if you are married, filing jointly. So first was 15, and then now it's 30 if you file joint. So here is Keiko, a senior nurse in Honolulu, earning 175,000. So like to give generously and doesn't always itemize. So we started bunching her donation every other year. So in December, she transferred 10,000 in appreciated ETF shares to her donor advice fund before December 31st and added another 1,000 by credit card. So the stock transfer avoided capital gain tax, and she received a full deduction for the fair market value of her gift. If you want to implement this strategy, 1, add up your current itemized deduction to see if you will exceed the standard deduction. 2, identify any appreciated investment you have held over a year. 3, initiate your DAF or direct charity transfer at least 2 weeks before year's end. 4, complete all cash gift or credit card donations before midnight, December 31st. 5, Keep your receipts and brokerage confirmation for your record. Bonus tip, if you are right on the edge of itemizing, pay your property taxes or generate mortgage interest in December to push you over the line. Now that we have handled retirement health and giving, let's move to a long-term tax tool that benefits your family, the 529 plan. So in this part 5, we're going to focus on education, saving, and 529 plan. This part is especially useful for parents and grandparents. Many states offer tax deduction or credit for distribution made before December 31st. Even if your state doesn't, the growth is still tax-free when used for qualified education expenses. Let's look at Carlo and Elena from New Jersey, earning $190,000 combined, wanted to use their year-end bonus wisely. In December, they each contributed $4,000 to their children's 529 plan, capturing a state income tax deduction and building future tuition savings. Let's look at parents in California wanted to front-load a college fund. They elected the 5-year gift rules and contributed $95,000 in November for one grandchild that used 5 years of their annual exclusion upfront, removing money from their estate while maximizing growth. Here's how you can apply it. 1. Check your state 529 plan deadline. Most require contributions by December 31st. 2. Decide how much you can contribute now. 3. If you plan to superfund, consult your tax preparer and file the 5-year election with your gift tax return. 4. Set up automatic monthly draft starting in January to stay consistent. Bonus tip. If grandparents want to help but you need cash flow for your own savings, coordinate so they fund 529 plans while you focus on your retirement contributions. Let's look at another important part. Let's move up to part 6. Let's talk about equity compensation, the area most professionals overlook until tax time hits. Let's look at employer stock plan and ESPP moves. If your company offers an employee stock purchase plan or ESPP, check your option before year-end. Most ESPPs offer up to 15% discount on company stock, and some use a look-back feature based on the lower price between start and end of purchase period. Here is an example. Lani, a project coordinator in Capole, participated in her ESPP with a 15% discount. When the plan purchased share on December 31st, she immediately gained equity. She plans to hold them for at least 1 year after purchase and 2 years after grant to qualify for favorable capital gain treatment later. Here's what to do in your case. So 1, you can confirm your ESPP purchase date and discount. 2, you can decide you want to sell or hold plan it now, and then either sell immediately or lock in gains and diversify, or hold for the qualifying disposition timeline. 3, if you hold, set alerts to prevent over concentration in your employer's stock. Bonus tip for you, if your company grants RSUs that vest in December, double check withholding. RSU income is taxed as wages, so increase W-4 withholding on your next paycheck may prevent a surprise tax bill. Now let's cover, we have covered a lot so far, like retirement, health, withholding, charitable giving, 529s, and stock plans. So now let's tie it all together in the part number 7, which is your December action checklist. You want to plot 90 minutes this year to do a W-2 year-end close. You want to follow the sequence. 1, confirm your retirement contribution, hit your target. 2, spend the remaining FSA balances and save receipts. 3, adjust your W-4 for final paycheck or bonus withholding. 4. Complete charitable transfers and donor advised fund contribution. 5. Make your 529 plan contribution before your state deadline. 6. Confirm ESPP purchases and RSU withholding. 7. Download your pay stub, benefit summary, and stock confirmation. 8. Store all these documents in your 2025 folder. So these simple steps put you ahead of 90% of employees before the year even ends. You have made it to the last part, some bonus tips and deadline that you cannot afford to miss. So let's cover our part 8. So here is what must be done by December 31st. 401k and workplace deferral, FSA spending, charitable giving and DAF transfers, 529 plan contribution and state benefits, W-4 adjustment and extra withholding if needed, ESPP purchase election. And here, what can wait until 2026. So what can wait? HSA top-ups or IRA contributions. So let's talk about Nina from Portland learned it the hard way. Her donor advised fund transfer were initiated on December 29 last year, but didn't complete until January 2nd. The deduction shifted to the following tax year, costing her $2,800 in higher taxes. So this year, she set her personal deadline for December 15th, and that's what I recommend you to do too. Before we wrap up, let's summarize. If you want to finish 2025 strong, you need to take action now. You want to max out on your retirement, optimize your health savings account, fix your withholding for this year and potentially next year if you have time. Give strategically, and then fund your 529 plan if applicable. Review your stock plan. Complete your checklist before December 31st. And if you want the tool to do it faster, check out our digital template at Pro Reductions on Etsy store. Everything from W-2 year-end planner to the charitable bunching calculators and HSA tracker. You can also learn more year-end strategy step by step at accessYinstitute.com. By following these 8 parts, you will walk into January knowing your 2025 taxes are already optimized and your 2026 plan is already in motion. Thank you for watching. I'm Mia. I will see you at the next update.